All right. Welcome back, everybody. Hopefully you've had a good time. I know this is a little bit late, but this is just got back from Los Angeles and enjoyed some time on the boat. Um, yeah, and let's get back into market planning. Let's get straight to it because I've got to get to bed as well and get to the workday too. So let's head over to our charts today, and what we'll do is we're going to start with the overall review. So let's take a look at the monthly. So let me do one thing here. We're gonna remove all the drawing objects on the monthly so that we can get a clean chart here. All right, so on the monthly, if you recall, we came up into this imbalance over here and we've rejected. Now we haven't gone down past this monthly short-term low, but I do reckon that we're headed down that way. I don't see why or how we can continue upwards and create all-time high. I just don't see that anytime soon. So my bias on the monthly, I feel like we are going to continue to run for this area, and we're gonna keep the drawing objects back. I know it's a little bit messy, but it is the only way on NinjaTrader I can help get this view out. So we're gonna go down into the weekly though. So with the weekly, so if you recall, and all those red lines are monthlies, but in the past week, we see here that we hit this weekly rejection block, which I'll zoom in a little bit so you can see that. So remember, a few weeks back, we ended up going above this weekly order block and rejecting. Above this weekly order block and rejecting. So that was a really strong rejection from both of those. And then this past week, we see that it rose all the way until Friday and then dumped on Friday. So quite a large move, would you say? So I do see that it barely rejected this weekly rejection block too. So remember, this all used to be a green candle, and then on Friday it just shit the bed. Excuse my language, pardon my language. Basically, we are now looking at a weekly where we've gone and taken some of that buy side liquidity there. There is some now resting above there and there on the lower time frame, but we've gone down quite a bit. So I'll be looking for the midpoint of this candle on the weekly. I'll see if it doesn't reach above that. It could reach up to that consequent encroachment, which would just be up and through these two. But let's see what price states. I believe that because we failed to achieve this short-term high, that we are destined to come back and target this short-term low down here and this corresponding weekly volume imbalance. So that's what I'm thinking is going to occur over the next few coming weeks. But I also know that seasonally, September tends to be a down month for the first half, and then or bullish for the first half and then bearish for the second half. So I'm playing to that seasonal tendencies as well. So that's what I see on the weekly. I see a tendency downwards. So let's go to the daily, see what we're looking at on the daily. So as you can see Friday's price action there, just completely given up the week. And we have a new week open here where it's going up. So my guess is that we basically will fill, if this doesn't fill all the way, there's going to be a new SIBI formed, sell side imbalance, buy side inefficiency formed around this area here. So my guess is that we're going to end up going and taking that out once that forms, assuming Monday doesn't take it completely out. I think that we're going to go grab that liquidity. There is a rejection block up here on the daily. I don't have it marked, but I do see one there. And we could go and take that and then drop. I don't know, but it does seem like we're going to go back to a premium or equilibrium before we head further down. Now, on the downside, what do we see here? So we see that we had this short-term low. It didn't quite get there, but it did create a relative equal low, and those are typically meant to be broken. So we do also have a daily, see the purple lines here, the daily buy side imbalance, sell side inefficiency, which has not had candles close through all the way. So I'm keeping an eye on that. And then I also see that further down, there's a weekly volume imbalance. I don't think that this bullish order block on the weekly is going to hold. If it trades through it, then we can treat it kind of as a bearish breaker as well. So keeping my eyes on that. But this week, I'd like to target this fair value gap here that's going to form based on Monday's price action. Hopefully it doesn't fill all the way, but I would like to see it fill some, maybe fill the rest of it on Tuesday, create a high of the week, and then continue downwards, take out sell side liquidity during FOMC, because this week, Wednesday, we've got FOMC, and then we head downwards for that volume imbalance, and of course, finally, this rejection block here. So those are things that I'm going to be looking at on the daily price. So let's go down to a 4-hour. Well, actually, I don't know if I have time to do this one, but same thing on the 4-hour. You can kind of clearly see that relative equal lows formed, and it's starting to inch its way up. You can see that there's a little bit of inch into this 4-hour fair value gap. We also see that there could be a potential high, low, higher, high, low displacement. So I'm looking to see if maybe this body combo here, if this new week opening gap serves as a bearish breaker or not. So this is from the previous week's new week opening gap. So I'm hoping to see that. That's what I'm looking for. There is a much higher premium 4-hour gap. So we're going to need to see if maybe it wants to come up to here, high, low, higher, high, lower, low, displacement all the way up here into a premium and then drop. So that's what I'm thinking on the 4-hour. And then on the 60-minute, same kind of concept here. Zooming out, we see that we kind of see our structure here. We see that it broke. It almost broke. It hasn't broken yet. But we do see that there is quite a bit of gaps here. And I kind of can see this breaker a little bit more clearer. There's one here. There was one here. And then there's a larger hourly one here. And where does that come out to be, right? So from this swing range, we can see that the 50% equilibrium mark is right about where this bearish breaker would be too. So really keep an eye on that 60-minute candle here in this space. I think that price can retrace up to this area. It would be valid to retrace up to there. There's a fair value gap on the hourly that's there too. And so that's what I'm looking for. And then of course we will look towards those lower time frame objectives as we get further closer down. So that's on the hourly. Let's go down to 15-minute. So on the 15-minute, this is a pretty wild inversion fair value gap here. So you traded through on the downside, traded through on the upside, traded back down through it, failed, bounced off of it, and then continued downwards. So with that, I'm going to remove this because we've already used it. It's balanced price range. We know that when we get up to it again, it's likely going to run for buy side liquidity. So we don't need to see that anymore. We see the daily levels that we've seen there. This daily inversion fair value gap likely is also used up. I need to go back to the daily to double check that one. But on the 15-minute, we can see this range still on the equilibrium. There's a fair value gap right above it, which leads to the 50 to 61% optimal trade entry. And that's within a bearish breaker. So this is going to be really important to have on the charts because I think that, this is the entire 15-minute bearish breaker here, okay? So I want to make sure I have all that set out over time as well. And I also want to make sure that I have the 15-minute fair value gap that's above equilibrium. So a premium sell side imbalance, buy side inefficiency. I think that's kind of key because this is a higher probability fair value gap. Yes, there's one up in the 79%. Yes, it could get there. Do I think it will? I mean, it's still within the possibilities and realms, so I'll be really careful to not to watch out for a spike up there. I'm thinking maybe FOMC, maybe we rise up a little bit. FOMC spikes up, takes out the really peaks, and then drops. So that's my bias for this week. That's what I'm looking for this week. That's what I'll be playing or eyeing. Typically, again, Mondays after a large range day, it's gonna be pretty rough in the morning. I'm not gonna lie. I won't be looking to trade anything until the afternoon because I think it's going to be quite choppy. But obviously, if there's something in play that happens, then great. It just tends to be a little bit sloppier, so I might shy away from the morning session just to be safe. But I am looking for these areas on the 15-minute time frame. So that's my bias for the week. That's what we're looking at. That's what I'm looking at. And I might actually leave that on there for the time being. So yeah, I think that's it on the hourly. And then of course we have the downside objectives that we mentioned earlier. Those have not changed at all. So on the hourly, it's just a matter of, there's a couple of other short-term liquidities, but I do think it's going to hit this volume imbalance sometime in this week. Needs to be, TBD if we're going to go all the way this low, but I believe that's what we're looking for. So, yeah, so leaves something to be seen regarding higher time frame lower lows. So we'll have to keep an eye out for that. So on the 5-minute, we can see same thing, nothing too much of a change from a weekly bias perspective. We have seen price drop briefly and then head up away from the new week opening gap. And so my guess is it's going to start, run price up a little bit throughout the day, Monday, Tuesday, Wednesday, spike, and then head back, maybe like spike upwards and then head downwards. That's what I'm anticipating this week. And that's it. There's no point in going down into the 1 minute until we actually see some movement and direction and bias. So, be careful. Markets can certainly be irrational. So it could possibly go up, but I mean, I don't think it's going to do that. It's going to go up in the first couple days of the week. I would like to see FOMC Wednesday kind of finish the spike up and then continue the larger move downwards. I would like to see that. The only thing that would make me think the other way is if we get well above this 79% retracement level and tackle this previous real-time hour gap. What does that look like? So I wasn't here Friday, but this is what that real-time hour gap looks like on Friday. So there is a liquidity void there where there's no trading. So that leads me to believe that at the very least, some of that might fill up. Maybe half of it could fill up, and then we could reject downwards. So that's what I'm looking at today. Want to keep this one super short. Hopefully, if you have questions, let me know. Let me drop them in the chat. And let me know what you see as well. I mean, hopefully you saw these same things, but if you saw something different, drop it in the chat and love to talk about it. So with that, I'm going to call it a night, and we're gonna call it a night for tonight, and we're gonna go get ready for the work day. So lots to catch up on, and good luck trading tomorrow. Be safe, and I will catch up with you a little bit more tomorrow morning. Have a great night.